now what, right? What do I do? So I'm a big fan of having separate LLCs for each rental property. There's some legal reasons behind that, so definitely check with your attorney, but big fan, also tax reasons, of course, big fan of having a separate LLC for each rental property. If you have partners, I would highly, highly recommend having an operating agreement. Personally, I will not get into any business without an operating agreement, but real estate specifically can be very particular and very picky about how it is handled. So definitely recommend having an operating agreement for that one. And of course, having a separate bank account per LLC. So with that being said, a lot of the questions are, well, okay, so I've bought my property, I've set up my LLC, I'm going to quit claim the property into that LLC, but there's no money in the LLC bank account to pay for the repairs or to pay for, the AC that needs to be replaced. So how do we get money into that LLC's bank account to properly segregate the LLC's expenses from my personal bank account? Make sure that we're tracking everything properly. So easiest way to do that, if you can, is make a loan to the LLC. So if you know that the repairs and the initial startup is going to cost, let's say $5,000, make a loan to the LLC for that $5,000. Maybe add another $500 or $1,000 into that bank account to make sure that there's some cash in there just in case something strange comes up. And then, of course, over time, as the LLC is collecting rent and is saving its profit in its bank account, you can start paying that $5,000 loan backwards back to you. The other way to do it, second way to do it, would be obtain a line of credit or a credit card in the name of the LLC. You do not want that tied to your personal name. You definitely want it tied to the EIN or, the EIN of the LLC itself. And you want to be able to then charge anything that's related to that LLC on that LLC's credit card or line of credit. And of course, the third way, probably the worst way to do it, and unfortunately the way we see it with most people when they're first starting, is they use their personal money to pay for things that belong to the LLC. Now, the reason why I call it the worst way to do this, the whole purpose of setting up an LLC generally is to segregate the liability of the entity and of your personal world into two separate buckets. And if you're using personal funds to buy business or pay for business expenses, or in the future, vice versa, if you're using business funds to pay for personal expenses, you're doing what's called commingling funds. And the IRS can actually bust through, as well as legal issues, can bust through your LLC segregation and actually get at your personal assets or vice versa, the business assets, if you are commingling funds. Basically, the court cases have come down and said, if you're treating your entity like a piggy bank, we will too. So my most important piece of advice for today's Facebook Live question and answer, and if anybody's got questions, happy to take them. Most important piece of advice, segregate your money. Segregate the entities and segregate the bank accounts and keep them as squeaky clean as you possibly can. It will only save you headache and hassle down the road. So once again, Shauna for Tax Goddess. Absolutely love seeing you guys every Tuesday. I'm having so much fun doing this, and I love all the feedback and questions and answers that we're getting throughout the week on these videos. So if there's ever a question that you would like me to cover, don't hesitate to send me an email, or you're welcome to post it to our Twitter channel or Facebook channel, and we will be happy to answer those questions for you. Absolutely love answering this stuff for you guys. So thank you so much for coming on today, and especially real estate questions, one of my favorite areas. So if anybody has real estate questions, don't hesitate to ask. Hope you guys have a wonderful day, and we'll see you next week.